Hello traders, my name is Tomasz Wiśniewski and I am Head of Research and Education at Axiori. Do you hear me? Is everything okay with the audio, video? Yes, let's start. Beautiful. So hello again. It is my pleasure to be here and thank you for coming because I know it's the 9th webinar in a row. So we started 3 weeks ago. You managed to be hopefully on every webinar, and now it's the last one. It's the last one in this cycle, but it's not the last one that I am going to see you, hopefully, because on Wednesday, next Wednesday, so 19th of February, we have another webinar, which I hope you will attend because, well, it will not be the Axiori Academy webinar because those are finishing today, but it will be other educational webinar, and I hope that you all will attend this event. Today, as you know from the agenda, from the schedule, today is live trading session, so we will get everything together. All that information that you learned, that you found out in the past meetings, we will use today. Tell me, my friends, do you see my chart? Do you see my chart right now on the... Yes, you do. What is this instrument that I'm trading right now? Can you see this? It's Euro to Japanese yen. This is hourly chart. No further introduction, guys. I'll get straight to the point. So no small talk today. I'm sorry. Let's get straight to the trading. This is Euro to Japanese yen. My friends, who of you was seeing my video on Twitter that I posted on our YouTube channel, short analysis with 3 best trading occasions that I posted yesterday? I posted S&P 500, I guess, and one of those instruments was Euro to Japanese yen, right? It was Euro to Japanese yen. And you can see that I opened position on Euro to Japanese yen, but I opened this position after this analysis. So it's not like on those analysis, on those short videos that I told you that you should watch, that I talk about history, what happened, etc. No, I talk about the real-time setups that you can, I don't want to say use, but you can at least think about this. Because again, I cannot give you any recommendations. I cannot give you any signals. I am not going to tell you buy here, sell here. I will not do this because it's forbidden by law. I can record a video with my outlook on the market. And on this video from yesterday, for example, I said that there is a beautiful situation on Euro to Japanese yen. And I was bearish on it, and I said that there is a really nice setup. I recorded this video, and after this video, I opened position myself. As you can see, I opened this position here. Okay, I opened this position here, and it is a beautiful trade because, as you can see, as for now, it is giving 1,600 euros. 1,600 euros. About the risk to reward ratio, because first I will tell you everything about this situation because it's the hot topic right now, and you can see it's happening in front of your eyes. So the original stop loss that I was having was here. Okay, it was above. The price went higher, then went lower, and when the price went lower, I saw this opportunity that buyers didn't use this chance to go higher, and most probably the price will go down. So I set my stop loss here. As you can see, my stop loss was on, let's say, 600 euros. As you can see, it's 600 euros here. Six. I'm sorry, guys. I think that on my side the connection is good, but as you can see, if everything from my side is going fine, then some of you will have a good reception. If you have problems, unfortunately, it's on your side. But don't worry, my friends. This webinar is recorded, and you will be able to watch it on YouTube. No problem with that. If not today, then tomorrow or on the weekend. My friends, so I open a short position here. As you can see, first thing that I want to tell you now is the risk to reward ratio, is the risk management, is the money management. So as you could see, I opened this position with 2 lots and I allowed myself to lose 600 euros, right? My balance is 90,000 euros. 1% is 900 euros. Right? 1% is 900 euros. I told you to not risk more than 1%. So I could have opened much bigger position. I could have opened 3 lots. If I would open 3 lots, that would be a risk of 1%. But I open only 2. As you can see now, I'm on profit 1,500 euros. Risk was 600 again, 600, 600, and 600. Almost 3 to 1. 2.5 to 1 risk to reward ratio. So my profit, which I could close now, which I could take now just by clicking it, would be 2.5 times bigger than the initial loss. Right? Than the initial loss. Why is it useful? Why you should aim for trades like this that give you huge rewards and small losses? Who can tell me? I was talking about this on the money management webinar. Please. Please, please, please. Who can tell me? Okay, again, why you should aim for the trades where you have small risk and huge rewards. So you are risking a small amount of money to gain a lot of money. It makes sense, right? It's logic. But why traders don't do this? Why they risk, for example, $1,000 to get $1,000? Let me explain you on this situation. So first, for example, you have a resistance, you have a support. This is the price here, 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 and here. And now a trader decides to buy or sell. If you buy here, this is the worst place where you can trade. Buy or sell, it doesn't matter. Because when the price is in the channel, the price can go up or down. Okay, this is chances for this is equal, 50% to 50%. So when you buy, you are going for this and risking this. When you sell, you're going for this and risking this, which makes absolutely no sense because you are giving away this what you can earn. The problem with this, if it's 50%, if risk to reward ratio is 1-to-1, is that you make a win, you make a one win, and then one loss, and then one win, and then one loss. All of them are for $100. So you earned $100, you lost $100. Earned $100, lost $100. Which is rubbish, because you are then on break-even point. What would happen, guys, if you earned $300 and then lose 100, then lose 100, then win 300 again, and then lose 100? What would happen, guys? You would have much more money from the wins than from the losses, but you would have more losses. So you would be wrong on this market 3 times and you would be right 2 times. No, you don't end up with the same amount, because here you won 300, here you won 300. So you won 600 altogether, 600. And you lost 100, 100, 100. So you lost 300. So you are 300 on profits. But here you end up with the same amount. 100, 100, 100, 100. That's when you trade with risk to reward ratio 1. This happens if you trade with risk to reward ratio 3-to-1, for example. Okay? You should aim for this risk to reward ratio. My original question was why you do this. Why I risked 600 and now I'm aiming for at least like 2000. Because if I will manage to earn money on this trade, and I already have protected 700 euros, but it's my mistake because I'm gonna lower this here. So I'm protecting 1,100 euros now, so almost 2-to-1, which allows me to make 2 mistakes after this, and I still will be on 0. 2 mistakes. With one trade, I allow myself to make now 2 mistakes, and I will not be on loss. Do you understand, guys? Is it clear? When you're right, yes, it is clear. Thank you very much. When you're right, you need to have nice, fat reward. When you are wrong, the penalty for you making a mistake should be small. This is the essence of trading. This is the essence of being a professional trader, not formations, candles, indicators, etc. No, risk control, money management, trading psychology, etc. Okay, my friends, let's talk about this euro to Japanese yen a bit more. Why I opened this position at the first place. Okay, this is the chart. Those who watched my analysis, and I know that some of you watched it yesterday, please explain me on the chat why I opened this position, because I explained this on the video. I'm listening, my friends. Or if you didn't watch this video, no worries, please read the chart right now and tell me why I opened this position. Tell me, my friends. It's in a downtrend. This is number 1. Downtrend. So in a downtrend, you can only sell. Nice. Price broke the trend line, support. This is 2. Although the trend line, the main trend line is here, which shows you that it's in a downtrend, but price broke 2 important supports. First one was this, and second one was this. So this is 2. What are those formations? What is this formation and this formation? Please. Wedge and a flag. Thank you very much, my friends. This bigger one is a wedge, and the smaller one at the end, this is a flag. This is a third reason why I open a position. Then another one. Okay, breakout. Here is the breakout. What happened here? What do we have here? Retest. Thank you very much. So broken supports were tested as resistances, were successfully tested as resistances. Okay? And the price bounced from those resistances and went lower. This is fourth reason why I opened this position. Fifth reason why I opened this position. I give you a hint. This, and this. My friends, please, I'm looking for your answer. What's this? The green. What is a green rectangle? Beautiful, Mr. John, Sir John. This is a false breakout above the neckline of the inverse head and shoulder formation. Left shoulder, head, and right shoulder. So with this, buyers, bulls, had a chance for a reversal. The price broke the neckline, which was a short-term midterm buy signal. But then the price reversed, and this was a false breakout. False breakout. So that was a trap. Buyers got in a trap. Many of them bought, but suddenly found out to be on a losing position, and the price reversed. That's a false breakout. False breakout is a really good trading opportunity, really good signal. And this was 5. Okay, now let me tell you something. As you can see, the price is nicely going down. We are making money as we speak. You came here, it was 1,500, now it's 1,700, almost 1,800. With 1,800 euros, risk to reward ratio will be 3 to 1, which means that after this trade, I can still make 3 trades. All of them can lose money, and I will still be on 0. Okay? With opening trades like this, I am allowing myself to make mistakes. I'm sorry. What I was going to tell you. Let me show you this. I'm sorry, I want to do this and this. You open a chart. Short time frame, I don't look at short time frames, my friends. You open a chart, random chart, and then and then you have buy, sell. When you open a random chart, the chance for the price to go up or down is what? 50-50, right? That's the beginning. 50-50. 50% that the price will go up or down. Then when you open a chart, plain chart, you start analysis. So you apply all those things that we learned so far on this course. What I do are four main factors. First one is trend. Again, guys, what is the trend here? Please. Downtrend. Thank you very much. Check. Now chances for the price to go down are 60% to 40%. Do we trade? No, it's not enough. Then you check formation. Let me check formation. Again, my friends, tell me, what formations do we have? Just to make it clear, those black lines, what are those formations? What are those patterns? What's the name? Yoko, my friend, thank you very much for this. Wedge and a flag. Sell, sell. Because wedge and a flag in a downtrend, for those who don't know, are trend continuation patterns. So there is downtrend. This is a correction. This is a trend continuation. And they are promoting the movement to the downside. And they did. So chance now is 70 to 30 for the drop. Then I take into the consideration support and resistance. Again, look at the chart. Broken supports tested as a resistance. Price being below major horizontal resistance. Price being below major downtrend line, which is a resistance. So we are below one resistance, one resistance, one resistance, one resistance, four resistances. How many supports do we have? Not many. I wouldn't say that we have any good support here. There was no good support, which again, minus for buyers because there are no good supports, bonus for sellers because there were plenty of resistances. That's 80 to 20% for the sellers. Then you can look for candlestick. Candle. Did I have candle? No, I didn't. There was no good candle. There was no bearish shooting star. There was no bearish engulfing. Yeah, like you remember from the webinar with Mitun, with my colleague Mitun, he was talking about those patterns. But I got another thing. So let me 80 to 20. Okay, not like this, but like this. Here. Here. False breakout. There was false bullish breakout. which is minus for buyers, which is plus for sellers. Now 90% to 10. About the candle, look on the daily candle from yesterday. What's this? What's this candle, guys? What's the name of this candle, my friends? Pin bar, okay, but okay, inverted hammer. What's the name of inverted hammer? What's the name of inverted hammer? What's the name of the candle that looks like this? Shooting star. Thank you very much. This is a shooting star. So there was a candlestick formation. Shooting stars are bearish candlestick formations. The problem is that when I was opening this position, there was no shooting star yet, because I was opening this position yesterday. Shooting star was created at the end of the trading day. But now there is a shooting star. Now there is a shooting star. So for those traders who were not there, we have candle. We have a shooting star which makes 100% to 0 for the sellers. With such a setup, are we surprised that the price is doing this, what it's doing right now? No, we should not be surprised, because you can see that all odds were in our favor. Every signal known to price action traders, to the technical analysis, was telling us that the price will decline. You don't have to believe if it's true or not. You totally don't have to believe in this, and market does not care if you believe in this. But my friends, you need to understand something which I told you before about self-fulfilling prophecy. It means that most of the market participants which are trading right now are educated from the books, from mentors, from traders who taught them technical analysis, candles, price action. They all see this because every trader in the world sees the same chart. Everybody sees this. They see those signals. They trade based on those signals. They saw those signals and everybody was like, okay, let's sell. The price went down. Nobody cares if you believe it, if you believe in it or no, or not. Nobody. Market, your friend, your cat, nobody cares. What is important is that market moves like this, whether you believe it or not. So, if most of the traders believe in it, the price will move according to those laws. This is why most of the traders did the same, estimated the not possibility but probability of one movement. Because at the very beginning, the probability is 50-50. The price can go either up or down. The price can rise or fall. But then you estimate, you apply your analysis, which you learned in those 9 webinars, and you try to estimate the probability of one movement, as you can see, buy or sell. For us, for our understanding of the price action, that was 100% sure movement. But objectively, it was like 55 to 45. Objectively for the market. But for you, it was 100% to 0. This is the risk that you have to take. But the market can do whatever. But thanks to estimating the probabilities and possibilities, which is less important than probability, you are able to open a good position. In this case, a short position on this instrument. And here we go, 1,800 euros on profit right now, 3 to 1. Okay? Another thing, guys. Guys, you can watch all those webinars on our YouTube channel. They were recorded, so don't worry. You will be able to go through it again and again and again. If you don't understand anything, something, just drop us a mail and you'll understand everything. Why I don't have a take profit order? Who can tell me why I'm not using take profit order? My friends. Thank you, John. Not to limit my profits. I would take now 3 to 1. But what if the price will go here? I will be able to take much more. If I trade only with trends, it means that I'm looking for big movements with the trend, which can go for years, for months, for weeks, or can end up in 5 minutes. You never know. But the chance for the trend is always better, bigger, for the trend to be continued. If I would have to have a stop loss order, I would consider this line or this line. So, for example, here, 4,000 euros, which would make really sweet risk to reward ratio. Really? Oh, I like greed. No. I don't like greed. As you can see, I open really small positions, so I'm not greedy. My friends, this is it. What I wanted to show you as well. We have to go to the 1 hour chart. Why? How to set the trailing stop, the stop profit. So this order, because it's no longer a stop loss. Stop loss was placed here, and what's your criteria to trail this stop loss? You see, I'm answering your question right now. My original stop loss was 35 pips. 35 pips. When the price is moving in my favor for the same amount of pips as I risk the stop loss, 35, I move my stop loss to break-even point. So when the price was here, I moved my stop loss, stop loss to break-even point. What you do with this, you remove the risk from this investment. You can no longer lose money on it, because if the price will reverse, your stop profit will be triggered and you will earn like €1 or something. Then the price moves in my favor because it's the trend, and you can see the price made a small top, then a small top, then a small top. So then I lower my stop loss, my break-even point, to stop profit. First it was here, then the price went lower and higher, set the high, my stop loss was here, and most recently the price went lower and a bit higher, and reversed. This is what? This candle. Very fast answer, guys. Fast answer, because you know this. Shooting star, beautiful, thank you very much. This shooting star tells me that the price wanted to go up, buyers wanted to buy, but they failed and the price went lower. And we have what? New lows. We made new lows. We are on the lowest levels since 11th of October 2019. So a very, very strong downswing. Now, if the price will reverse, it happens. If the price will reverse, I am going to make 1,100 euros. Risk to reward ratio 2-to-1. Still awesome trade. If the price will continue to go down, what I will do? If the price will continue to go down, and we'll do, for example, this and this, because the price is doing this, making lower lows and lower highs, because that's the characteristic of the downtrend. What I will do is I'm not gonna move this, sorry, I'll just take it from the way. Price will go this and this, so I will lower my stop loss here, stop profit here. Then the price will go down, make high, so I will lower my stop profit here. And then lower, 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 lower. Okay? Now I need to move my stop profit to the original point. Very important thing. You don't put your stop profit here. Why? You have to give some space. Why you don't put it here? Because the price can test this level again and bounce from it. If you would have this in line, you would close your position too early, prematurely. Also, there is an issue with here. When you sell, you see, when you sell and buy, you have two different prices. You sell with bid and you buy with ask. I already sold with bid. So if I sold with bid, I'm gonna close with ask. So you need to make a space here, first of all, for testing this level again. And another thing is to for the spread, you need to make a space for the ask line, because this position will be closed not by bid line, it will be closed by ask line. Properties, common, show ask line. As you can see, this trade will be closed by the red line, not by the black line. So you need to leave room for this. Marcus is asking us if those rules are applicable for stock trading. Yes, Marcus, they are applicable for stock trading as well. Yes. Okay, my friends. Any questions about this? Any questions about this trade? Someone asked about my strategy. That's my strategy, guys. My strategy is to open a chart. I open chart. Oh, before this. If you want to trade now, do you wait for the pullback? I wouldn't trade now. Why? Because it's too late. This is gone. Train is off the station. I am totally against selling on the local lows or buying on the local highs.
As you can see, Forex market, stock market moves in corrections. Upswing, downswing, upswing, downswing. If you miss this instrument, this movement, I know that it looks tempting to open position there. But it's not the best thing. Of course, the price can collapse. But the problem is risk to reward ratio, where you would put your stop loss. This drop is too, well, it's not too strong. It is significant. So the price can reverse without canceling the sell signal. Price can go down without canceling the sell signal, but still can go up. All right? So I personally would wait for the correction to happen. That's part of my strategy, guys. When there is a downtrend, so price making lower lows and lower highs. Okay. I am focusing on the selling here, here, or here, instead of selling here or here. I'm trying to catch end of the corrections to enter the trend, but with better price. Does it make sense for you? Does it make sense that I don't want to open with bad price, but I wanted to open with the best price in the trend, which is after the correction? Thank you very much that it makes sense. Going back to my strategy, my friends. You open a chart and it's a plain chart. Chances are 50-50. I apply 4 or 5 things to estimate the probability of one movement. As you can see, in this trade, it was trend, formation, support, resistance, false breakout. Usually it is trend, formation, support, resistance, and candlestick pattern. Everything you learned on those 9 webinars. Now it's just a matter of experience and combining those together. So you combine those factors in one to increase the odds, to increase the probability of one movement. If you have bearish trend, bearish formation, bearish bounce from the resistance or the breakout of the support, and bearish candlestick pattern, you trade. But you don't buy, you sell when you have like this. Okay? This is it. You know those techniques. You know candles, you know formations, you know trends. Now it's just a matter of applying this all together and trade. My friends, very important thing. You have this table. Buy, sell. Trend, formation, candle, support, resistance. Trend is bullish. Formation is bullish. Candlestick pattern is bullish. Beautiful hammer. Support, resistance, no. What do you do? What do you do in this case? If you have 4 checkpoints and 3 to 1. 3 checkpoints are telling you to buy and one nothing. No, my friends, you don't buy. You don't buy. You wait. You don't do nothing. Why? Thank you very much for answering. Wait. Why? Let me show you this. Because you have this amount of instruments, this amount of time frames, that there is always a setup that has all 4 of them, which means that there will be more chances of a success than this. Also, you wait because you don't have to trade. Only the thing that you are a trader does not mean that you have to trade. The aim of a trader is to make money, not to trade. Do you understand? It is not a shame to be without a position for a day, for 2 days, for 3 days. It is not a shame for a trader to wait for a setup for 1 week or 1 month. Because to make money, you need only 1 trade a month to make profit in this month. All right? So you don't have to trade. You can, but you don't have to. You analyze more, you wait, you do the research to find this perfect trade. Thank you that you agree with me. It means that I'm in a good place teaching you, right? if I'm talking good things. All right, my friends. I don't tell you that you should trade with trend, formation, candlestick pattern, support, resistance. You got enough tools, for example, on the webinar with Mitun, who was talking about the indicators and oscillators, that you can create your own list of 3 or 4 factors, let's say, which price needs to fulfill in order for you to have more, to be certain about the movement. Keeping in mind that you never can be certain about the movement because price can do whatever the price wants. But it's all about the odds, all about the chances. Yoko, yes, that was my problem too. I was over trading. I bought 2 screens. I was thinking like, okay, I'm gonna be a trader. I'm gonna trade the shit out of this market. I'm gonna be the boss. But it's not like this. Trade less to earn more. It's all about quality, not quantity, my friends. To show you this, this is my statement. As you can see from today, when the euro to Japanese yen was profitable on 1,300 euros, this is the equity line. It could be better, but I'm not complaining. It's a healthy uptrend, right? I would say it's a nice uptrend. Look at this. Percentage of profit trades, 50%. Percentage of losing trades, 49. Every other trade I'm making a mistake. This guy, me, who is trying to teach you, who is playing a smart ass, who is telling you about those complicated things like candles, patterns, money management, this guy is losing every other trade. So I make win, loss, win, loss, win, loss. Apparently he's not that smart, right? But largest profit trade, 2,600. Largest loss trade, 1,600. Average profit trade, 850. Average loss trade, 500. Thank you, that's it, case closed. It's all about how much money you make when you are right and how much money you lose when you're wrong. If you will allow yourself to lose too much money when you're wrong, it's your mistake. And you cannot allow this. Maximum 1% on your capital per 1 trade. Thanks to this, you are allowing yourself to make a mistake, and making a mistake is absolutely normal. This is absolutely normal to make mistakes, my friends. Do I trade on short time frames? No, because I don't believe short time movements on the short time frames are reliable. As you can see, I even removed short time frames from my platform. Obviously, I can still access them, like 1 minute, 5 minutes, but to make my working space clean, I remove this. I use only weekly, daily, H4, H1 to analyze. Another thing that I wanted to show you on my statement, my friends, are different instruments. So I go on Canadian dollar, Swiss franc, euro dollar, oil, gold, DAX, different instruments. Also, I sometimes buy, I sometimes sell. Many traders, they want only to sell or only to buy. That's stupid. You are limiting yourself from many different possibilities. Guys, everything is recorded. You will be able to access this webinar later. All right. As you can see, loss, win, win. Those small trades, it's break even. Okay, so price reversed. And break-even trades decrease the average profit rate. So average profit rate would be much bigger if the system did not count break-even trades as profit trades. Okay, so my average profit rate is bigger, which makes even the percentage of profit trades smaller, because in those profit trades, system counts break-even trades, which I don't consider as profit trade. Break-even is break-even. I just made like $10. For the system, it's profit. For me, it's nothing. So really profit trades, I have even less. My friends, big win. Small win, loss. Big win. Loss, loss, loss. Big win. Loss, break even, loss, loss. Big win. Small win, loss, 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 loss. Big win, loss, break even, loss. As you can see, you don't have to be right every time. This market is so complex. You have so many instruments, millions of market participants, billions of dollars floating every day, governments, banks, hedge funds, presidents, coronaviruses, flying missiles in the Middle East. So many factors that you absolutely cannot be right every time. So don't focus on it, my friends. So this is my statement. I am sorry. What time frame do you use to enter the trade? I estimate all the situation. Oh, you can see that Euro to Japanese yen is trying to reverse. If they will be able to pull hammer out of it, that probably will mean a reversal, and I will think about closing this trade. Actually, in front of you, we'll see what I will do. Maybe I will close it, just like this. Why not? So coming back to your question, I estimate the trend, the main situation on daily chart. Then H4, I still check if it makes sense. And on H1, I look for the entry point. It looks like this. All right. Please don't ask me about other brokers. It's very rude if you get all the education from us for free and you're asking about other brokers. I don't know about other brokers. I know about Axiori, that you are right. We have lightning speed execution, low spreads, and many, many more. Is it ideal to open a trade with 10 pips take profit and 30 pips stop loss? Opposite, my friend. 10 pips 10 pips stop loss and 30 pips take profit. If we talk about the ratio, because I aim like for 300 pips take profit and 100 pips stop loss. So you're going very short movement. I don't like short movements. I like long movements. I check all those time frames. This situation has to make sense on weekly, daily, H4, H1. What I wanted to show you as well is that we have New Year's gift. This new year is so far kicking our asses. Fires in Australia, war in the Middle East, now coronavirus. So it's not the best year on the record. Global warming, weather is crazy. Now it's windy as hell in Europe. But to make it a little bit better for you, we have this gift for you with a bonus. So now I'm gonna copy this link to the chat where you can open this and you will see. We give money for you for the start. And the date of the promotion is on 17th of February. So in 4 days. So make it fast, my friends. Make it fast if you want to apply for this promotion. Here you have terms and conditions of this. You can read about this. After 9 webinars with us, getting all this knowledge, I think it would be nice to test yourself with a little bit of help from our side, which is this bonus for free. Any questions to me about the live trading, about the system? Oh, you see, this is an ugly candle. After this kind of candle, for sure it will be reversal. We have still, well, for sure. Looking at my experience, the price will reverse sharply. So what I'm gonna do in front of you is X. The position is closed, as you can see, very fast execution. Boom. Position is closed. Profit is here, 1,470 euros, almost 3 to 1. Account is on all-time highs, as euro to Japanese yen was on very lows, and the S&P 500 is on all-time highs. It's like my trading account, which is nice. I'm honored that I could close this position in front of you. Can I swing trade with $200? Man, you can swing trade with $100 as well. You can swing trade with any amount of money, my friend. Just go small with small positions. Open small positions and you will be able to swing trade as long as you want. Any questions, my friends? As you can see, I analyze this charts. I have instruments opened, lines applied, etc., etc. Oh, this is a good one. Who was watching my trading video from today? I was talking about British pound to American dollar, and I said that there is a nice bearish setup. But I'm wrong. Look, the price went higher. But on this video, I mentioned something which you will be able to see. You can check it yourself on YouTube. That I said that the sell signal will be triggered when the price will break from the flag. You know this flag. Flag is the trend continuation pattern. Trend was bearish, there was a flag, breakout of the lower line of the flag, supposed to give us a sell signal. Only then the breakout did not happen and the price reversed. You see? This is beautiful. You have to wait for the breakout, for the confirmation, etc. Do you have any favorite indicator? No, I don't. I don't use indicators. I use only plain chart. I use only price action. If I have to use indicator, I use MACD. Just MACD to check for divergence from time to time. But I don't use indicators at all, I would say. Like very, very rarely I use indicators. Australian dollar, Japanese yen. Yes, sure, I can tell you about this. So the latest development is this inverse head and shoulder formation, right? Which has this neckline here, but it can also be a wedge. For now, the correction can continue. In my opinion, breakout of the upper line of the wedge could give us a buy signal, but short term, as we are I accidentally open a position, which I'm gonna delete. Because the price is approaching horizontal resistance, as you can see here, and buying in the uptrend is not the best option what you can do. But in the short term, yes, and in the long term, if the price will break the lower line of this wedge, that will be a sell signal for me. So far, there's no signal. Why? Because we are inside of this wedge. It's the same as it was with the cable. We were inside of the flag, and there was no signal, no sell signal. Do I use moving average? No, I don't use any indicators. Any indicators. How do I draw a line? Here on the platform, you have drawing tools. Here, draw trend line, trend line, trend line. I know what you are asking for. By default, in trend line properties, here in parameters, you have checked ray. You have to uncheck it. If I have this is the trend line, right? So in order to draw those lines, trend line properties, parameters, uncheck ray, and you will be able to set the length of the line yourself. I hope that helps. Okay. Yes, this could be a false breakout. This could be a false breakout, John, but we still don't know. We have to wait. False breakout will be a false breakout when the price will reverse. Once the price will reverse, that will be a false breakout, and I will try to trade it once the price will come back below the green line. Will you organize this kind of webinar later in the future? We are having webinar on 19th of February, so Wednesday. We are having another webinar which I invite you already. I hope you all will attend our webinar on Wednesday. Please stay in touch with our sales team. You will also receive an email with an invitation for this webinar, and you will be able to attend. Okay, my brothers, thick green line. This is support resistance on Australian dollar to Japanese yen. As you can see here, I labeled crucial resistance. How do I draw it? I take a rectangle and draw supports and resistances. What do I think about Euro USD? I made an analysis about this today, and I think that in the long term it is bearish. All right, my brothers, thank you very much for attending this, brothers and sisters, obviously. Thank you for attending this webinar. I hope that you really enjoyed this. If you did, please leave a feedback review. Again, I am telling you that for those who managed to have our webinars, we have this bonus, which I'm gonna give you again the link to, and I'm looking forward to seeing you in the future because we have more and more webinars coming. So stay with us. We will educate you the best we can. All right? It's not the end, guys. It's the beginning. It's the beginning of your trading journey. It's not the end. We are not leaving you right now. We will keep teaching you. Next webinar is on Wednesday, more or less the same time. You will get an information. Guys, Thank you very much. All the best. See you. Have a good weekend. Bye bye.